He is the founder of the Jim Bottrell Real Estate Team. Jim has thebuyers.com, very easy to find, and he really does. He always is great to give us a market update, kind of a look at what's happening, because we all know it's pretty difficult. Jim, thanks so much for being here. Welcome back to the Inland Empire Answer.
Thanks for having me.
All right. So last time we spoke, it was just prior to the Fed dropping interest rates. We all expected a quarter point, and you said that it was possible that the Fed would do a half a point reduction. So what ended up happening with mortgage interest rates? Such a big factor for people.
Well, the Fed did end up dropping by half percentage point, but the result was pretty much what I said was going to happen, in that the mortgage market had already priced in the Fed lowering the rates. So the result for mortgages was pretty much no change at all. We are still seeing conventional 30-year fixed mortgages hovering in the low to mid sixes. I've been seeing VA mortgages, though. They've actually come down a little bit. We're starting to see them in the high fives, so really great news to veterans like myself out there. So they fought for this country, deserve to own a piece of it. In June, now, the reason mortgage interest rates didn't come down is, remember, in June through September, mortgage interest rates dropped about 0.75%, right? But they did that with no Fed funds rate reduction. So when the Fed did cut rates last month, that rate reduction was expected. It's already been priced into mortgage rates. And that's why we didn't see a reduction in mortgage interest rates. It's already been priced in.
Really interesting. Now, you said in the past that the two rates are related but not locked into each other. Can you explain for our listeners the difference between mortgage interest rates and then the Fed funds rate and how they interact together?
Yeah, absolutely, I can do that. I'm glad you asked that. Most people don't know that they're actually different, people don't know how they interact with each other. So I'm glad you asked. While it is a tedious explanation, I can give you a really simple explanation, probably an oversimplified explanation, but what I'm going to say does ring true. So the government uses the Fed funds rate as one of their tools to control, meaning to speed up or slow down, the economy. The Fed funds rate does not actually control mortgage interest rates. The Fed funds rate is simply the bank-to-bank overnight lending rate. Most people don't realize it, but banks loan money back and forth to each other constantly. So when the Fed increases that lending rate, well, that bank that's borrowing the money, their cost of business increases, so they then increase interest rates to the borrowers, meaning that they increase the rates they charge for loans like auto loans and mortgage loans. And it's through this process that the Fed controls the economy. They can speed the economy up by lowering the Fed funds rate, which causes consumer interest rates to drop, which encourages people to borrow and spend, or the Fed can slow down the economy by increasing the Fed funds rate, causing consumer interest rates to increase, which obviously discourages people from borrowing and spending. Again, that was an oversimplified example, but it is accurate.
All right, so what's going to happen next? When does the Fed meet again, and what do you think they're going to do?
Oh, well, let me get my crystal ball.
I know. I love making you do predictions, Jim. Come on. And when am I going to win $14 million?
You know what? I think what I'm going to do is I'm going to go grab my daughter's Magic 8 Ball.
Perfect.
By the way, one of my friends just bought me a Trump Magic 8 Ball.
Come on.
And it talks. It is so much fun. I recommend everybody get one. It's absolutely hilarious. You shake it, and it's Trump's voice that gives you the answer.
Oh, I need one of those.
Family entertainment.
Love it.
Oh, and I have nothing to do with it. You can buy them on Amazon. They're like $15. They're fantastic. I mean, it's a gag gift for everybody. It's not even a gag gift. We love it. My kids play with it all the time. Anyway, Trump's Magic 8 Ball aside, the Fed's next meeting is on November 6th and 7th. So that's, the day right after the election. So what are we expecting them to do? Well, they'll probably reduce another quarter point, but that's not going to have any impact on mortgage interest rates. Honestly, all the financial institutions right now are pretty much just sitting tight for the next 30 days. They're waiting to see what's going to happen in the election and what's going to happen with the Fed. So I just really wouldn't expect any changes with, honestly, anything in the next 30 days.
Well, what do you see the real estate market doing through the end of the year? Because I'm sure the election has an impact on everything, but what do the next 3 months look like?
Not much happening.
Boring.
As far as right now goes, we're starting to see a little bit more inventory. There's more houses for sale. Houses are sitting a little bit longer, but not enough to have an impact on prices, but still pretty good opportunity for the buyers, because I've seen some buyers negotiate some really good deals when it relates to terms. Not able to negotiate the price so much, but definitely the terms. So we're seeing buyers getting seller to pay for all their closing costs, sometimes interest rate buy downs, which is huge. That's tens of thousands of dollars the sellers are giving to concessions to the buyers right now. So there's actually pretty good opportunity for the buyers right now. What
about home prices? What do you see for them through the end of the year?
Again, nothing. There's really not going to be much happening between now and the end of the year. As I mentioned earlier, there really aren't many people doing much as far as buying and selling homes. The market's pretty dead. Most people are sitting on the sidelines, waiting to see what happens to the election in a month and the Fed's next meeting. And then once that dust settles, we're going to be in the holiday season. So that's traditionally slow anyway. So through the rest of the year, we're going to be pretty stable.
All right. So I want you to shake up that Trump magic 8 ball. What do you think about next year, 2025? I can't believe I'm saying that. That seems so far away, and it's like 3 months out.
I know. Well, I'll tell you what, I wish I had the magic 8 ball with me right now, because I would have actually played it for you and we'd have done it, because it is so much fun. Okay, as 2025 looks like, interesting conversation. Most of the listings that I've taken so far this year have been somewhat distressed. As you know, most homeowners are sitting on those sub 3% mortgage interest rates. They are dug in like an Alabama tick. They are not giving those up. I used to love my home, but now I love my interest rate. But there are people who are giving up those super low interest rates, and they are distressed. They're being forced to sell. So, they're selling a deceased parent's house. There's a divorce. There's a lot of hoarder homes and in really bad condition homes that people can't make the payments. But those are the fringes of society, and I kind of refer to them carefully as the vulnerable parts of society. So they're not the mainstream people. Mainstream people aren't selling. But what this does tell me is that this was, 2024 was very different than 23 and 22 in the type of people that are selling their homes. So that tells me that our economy is on a tipping point. It can go one way or it can go the other. If we tip in the right direction with a strong, knowledgeable leadership, we'll find ourselves in a strong economy and lower interest rates and more confidence, more consumer confidence. And that's going to open the door to mainstream homeowners finally giving up those 3%, sub 3% interest rates for maybe a high 4, maybe a low 5% interest rate, so they could upsize or downsize, and that'd be kind of more of a normal market. However, if we get the wrong person that comes in power, poor leadership skills, a blatant lack of understanding of how economic works.
I don't know who you're talking about.
I don't have any idea. I'm just guessing. If that happens, if that tragedy happens, I expect the economy will tip the other way, and then we could be in a recession. And for housing, that means that vulnerable population I talked about earlier, that's going to creep into mainstream population. And that means when mainstream people start being forced to sell their homes, well, that could be bad.
In the market. He's got such a great perspective. Jim has thebuyers.com. Jim Bottrell, his real estate team, they take great care of you. Jim has thebuyers.com. And Jim, I always enjoy our time together and catching up. Thanks so much for being here.
Fantastic. Thanks for having me.
Thank you. Jim has thebuyers.com. Jim Bottrell with our real estate update and an update on politics, too. A little bit of fun as well for your weekend. Yeah. Jim, thanks so much for being with us.